Welcome back to Lamb's Cryptoverse. I'm just going to make a quick note because this is important news. Finally, we've got a peak in inflation. This is something that I predicted during my January forecast. But I thought inflation was going to peak in April, so I was off by a few months. So we peaked in July. So I think the difference is because when I first made the framework, it was before the Ukraine-Russia war that occurred in February. And then I revised it up later, my peak inflation. But I just want to go back to my original framework, which was inflation peaking by about April, May. But you know what? We're just a little later than that, and this is a good thing. Now that inflation is peaking, we can come down quickly until a certain point. So we're going to come down quickly until maybe the fall, and then inflation is going to become stubborn. And that's normal. It's normal for inflation to come down quickly in the beginning because we got base effects, things like that, and commodities were at unsustainable prices. I mean, look at used cars. I mean, people were selling used cars for more than they paid for it. You know something's wrong when that's happening. And remember, used cars and new cars were really expensive because there was a shortage in semiconductor chips. But you know what? That ain't happening anymore because if you read the news from Intel, AMD, which is Applied Micro Devices, NVIDIA, and Micron, they're all saying that they're seeing a slowdown in semiconductors. So yes, it's still true that the certain chips are in short supply, like for automobiles, for cars. Like General Motors said they have like 100 cars sitting in their lots that are not finished because they're missing chips. While that's the case, for the most part, I think we've seen a top, not just in inventories of semiconductors, but of all inventories, because we have to remember there was a COVID-led increase in inventories. So that tied with peak inflation and also energy prices, falling energy prices, is really going to tame, I should say, inflation. If you look at production, U.S. production, we're at the highest point we've been since April of 2020. I think we're at 12.2 million barrels per day, and it looks like we're going towards around 13 million barrels per day by next year, and that would be, I believe, an all-time high. So people talk about OPEC Plus being an important, huge producer. People don't realize that the United States is actually one of the largest exporters and producers of oil in the world. So let's go to the headline here. Actually, I wanted to show you my screen. So here's inflation. We had inflation easing slightly to 8.5% in July. I've got some notes here. So that's down from 9.1% in June. So that's a big decline from June. And so I think, like I said, this is the beginning of the peaking of inflation. And core CPI was plus 5.9% in July. So it was good, but it didn't come down as much as the reported number for CPI. But overall, this looks good. And the PPI, Producer Price Index, is going to be coming out in a few days, and that's probably going to be peaking too. So we've got some good news here. So how's the market reacting? The market's up about 2%, so it's reacting very well to this. But I drew a trend line here. If you see, I think there are many things you can look at, many types of trend lines and support and Fibonacci and DMARC indicators. But if you add it all together, and sentiment, never forget sentiment. If you look at all of them, it looks like we're coming close to a peak. I think we're within low single digits of a peak in S&P 500. As you know from my framework, after we peak and during the next few percentage gain, after that, we're going to come down hard because the Fed doesn't need to raise rates aggressively, but they still need to continue raising rates because number one, they're looking at lagged data, and number two, they're going to keep raising rates until inflation, the CPI, goes down to around 2 to 3%. So there's a lot more work to go. So we're beginning to win the battle, but not the war. And speaking of inflation, this is something I like to look at, the CME FedWatch Tool. And you can see here now most investors think that the Fed's going to raise rates by 50 basis points by September. And that's a 60% probability of that right here. and they're only looking for a 40% chance of a 75 basis point increase in the Fed funds rate. What I think could happen is if we get some bad inflationary data points, which is likely still, the Fed may actually raise rates 50 basis points, but not September like we have here, but by August. And the reason you don't see August here is because there's no Fed meeting in August. But that doesn't mean the Fed cannot raise rates in August. So that's what I'm looking for. I know that I'm the odd man out here because I don't think anyone's talking about that, but I still think we could get a 50 basis point Fed fund rate increase by August. So that's all I want to talk about today, is that we're seeing a peak in inflation, stock market's up 2%, and the CME Fed Tool is saying we're looking for a 50 basis point raise in rates. Well, thank you all for listening.